welcome to our panel today on national versus international payment systems, the evolution of payment systems. My name is Lewis McClellan. I'm the editor of the Digital Monetary Institute. Delighted to have you with us today, and I'm delighted to be joined by an excellent panel to discuss a really fascinating topic about the national and international payment systems. Over the past few years, we've seen proliferation in the types and methods of payment systems, and I think particularly after Russia and Ukraine, the action there earlier this year, and the suspension of services by international payment systems, Russia has done quite well out of having its own domestic payment solution, MIR, and there's been some commentary around the fact that other central banks might look to sort of emulate the success they've had there. And we thought it was a very interesting opportunity to examine what are the challenges of setting up your own national payment system, whether that's in competition with international payment solutions, and how difficult it is to achieve the standards that people are expecting. People are expecting a lot from their payment systems these days, extremely high degree of security, and there's growing cyber threats every day. There are interoperability challenges, a need for cross-border interoperability in particular, given the increasingly global nature of commerce, particularly e-commerce. I've got a fantastic set of panelists with me today. We've got the Managing Director of Saudi Payments, which is the national payments infrastructure provider and the main facilitator for payment services in the Kingdom of Saudi Arabia, Abdulaziz Al Afalek. We've got Dirk Schrader, the Deputy Head of the Payments and Settlement Systems at the Deutsche Bundesbank, and Tim Masella, the Head of the National Payment System at the South African Reserve Bank. I'll give you all a chance to introduce yourselves, and if you can tell us a little bit about the payments landscape for retail in particular in your countries and jurisdictions. Abdulaziz, we'll start with you. Thank you.
Thank you, Lewis. Happy to be here. I would like also to welcome my fellow panelists and the audience. Basically, Saudi Payments is a fully owned subsidiary of the central bank, SAMA, in Saudi, responsible for the operation and the enablement of the national payment systems in the kingdom. Under the strategy of the central bank, and also it's overseen by the Vision 2030 strategy of the kingdom. The journey with the payment systems, or the national payment systems, have started more than 35 years ago. We started from the establishment of our ATM and point of sale national scheme called MEDA. That was back in the 1990s. Followed that by the establishment of a unique electronic bill presentment and payment. At that time, the system was called Sadad back in 2004. That was followed by the launch of our e-invoicing platform, ESAL, in 2018. And we are very happy that we recently launched our instant payment systems, Saria, in February 2021.
Fantastic, thank you. Tim, let's come to you next. Can you tell us a little bit about yourself and the payments landscape in South Africa as well?
Okay, thanks very much, and grateful to join this conversation today. My name is Tim Masella. I'm the head of the National Payment System Department at the South African Reserve Bank. If I just have to make a reflection on the development of our retail payment systems, I'll indicate that in the early 1970s, around 71, 72, we implemented our current electronic funds transfer system, which is direct credit and debit systems. And this system has held us in good stead. I'm going to share with you briefly the changes that we are effecting there. Prior to that, as many jurisdictions, probably our retail payment system had been dominated by checks. which we managed to phase out. We don't have checks anymore from 2018. Now, in terms of the electronic funds transfer systems, we have implemented a real-time or faster payment service in 2006. It had not been as effective as we wanted. At launch, the providers of the service viewed this as a premium service, and we believe it had been overpriced. And even the take-up, not all major banks adopted it at the time, so it didn't gain traction that we expected. Now we are launching a reviewed system called Rapid Payments, which is going to offer us the real-time retail payment with proxy services and request to pay and all these newer features. And it's going live in February next year, while the old real-time clearing, which is the real-time retail payment system that implemented in 2006, will continue to live side by side. When we come to the EFT debit system, we have a unique situation where we implemented a system called debit check. This is a debit system where the consumer authenticates the mandate and gives that authentication to the payment bank, because we realized that there had been abuse of this system, and the system has been launched in 2021 and is going very well. And for those that are interested, we can share further details of that going forward. Otherwise, there's a phenomenon that we always asked about. We do not have a very effective mobile payment system like our sister countries in East Africa, where they had M-Pesa, because the offerings that we have in the market had been effective. And when M-Pesa tried to launch in South Africa, it couldn't take up as envisaged. So I'll pause here and give the chance back to you, but I'm available to answer further questions relating to our landscape. Thanks, Lewis.
Fantastic, thank you. Yeah, it's been incredibly interesting to watch the development of some of these new mobile payment solutions in Africa, and I guess the different success that they have based on a lot of different factors, but the existing payments landscape in the country is very important. Dirk, let's come to you now. Thank you.
Yes, thank you very much. So I'm the deputy head of the payment system department, not the head. So it's not so easy to summarize in 3 or 4 minutes the situation in the euro area. You know, the euro area is composed of 19 countries. We have a common currency, the euro, but we still have, I would say, different infrastructures. So since 1999, we have done a lot of efforts to harmonize the payment landscape in the euro area. And that was mainly due to the fact that we have tried to implement common standards, common procedures, for example, direct debits, credit transfers, that was put under a common framework. But nevertheless, we have approximately 25 retail payment systems at the moment in the euro area. For sure, we have a backbone, a common RTGS system run by the euro area central banks. We also now have an infrastructure for instant payments, but that shows a little bit that this is quite complex. And what is also important, owing to the fact that we are 19 countries, the payment behavior is quite different. For example, when you look overall, approximately 50% in the euro area are cards, 22% are credit transfers, 20% are direct debits. But when you look at the different countries, in Germany, for example, you have 43% direct debits. In Finland, no direct debits at all. In Portugal, 72% of card payments. So that shows it is still a different, I would say, tradition. And that also then poses a few questions with regard to the payment landscape. So when we look a little bit at the features, what we have seen in the past years is that card payments have become much more prominent, for sure, due to the contactless card function. I think when we look 4 years ago, we have now 40 or 50 payments more in terms of card payments. We have overall 640 million cards in the euro area, so roughly 2 cards per inhabitant. And there is still some significance of domestic card schemes. So at least in my calculation, 60% of all the card payments are processed via domestic card schemes. But the point is, they are not working European-wide. They are working only in the domestic context, for example, in Germany, in France, in Spain, but not in the overall Euro area. And for sure, you already said it, we have seen massive growth with regard to e-commerce payments. I think 15% of all the card transactions are remote transactions. But that being said, again, here we have quite different payment behaviors. You have countries where card payments in e-commerce do not play such a big role. For example, the Netherlands, they have an online payment application for e-commerce payments, accounting for market share in the Netherlands of 80%. And for sure, we also have some new successful innovative solutions, for example, P2P solution in Spain, and then in the EU, in Sweden and Denmark. But that are only, I would say, domestic solutions. And that points me to the point we might not have a national payment scheme, but we are working on a strategy. And the strategy, I think, is rooted also in the idea that we must ensure that there will be competition in a market, also with strong network effects, but that we also care for sovereignty. And you might look differently on that, but it is quite clear, and you already pointed out to the most recent developments. I think payments are a critical infrastructure, and therefore you must make sure that you are able to also influence the development of this infrastructure. Last but not least, perhaps the 3 points which are important within this strategy. First, I think we need also to ensure that there will be a full deployment of instant payments. Instant payments are in the euro area available since 2018. Currently, they account for roughly 13% of all the credit transfers. That is not yet sufficient, so we have to improve. Second, as I said, owing to the fact that at the POI, it is mainly cards, and we still see that most of the solutions are working only domestically. So there is the intention to provide for a pan-European scheme solution at the POI, as I would say a complement, for example, to the international card schemes. And last but not least, since 2018, also open banking plays a very big role in the euro area. And that is also what we would like to see much stronger in the future.
Fantastic. Yeah, it's a really fascinating mix of payment styles, and yeah, it must be a big challenge to balance all that. Just a note for the audience, you should see on your screens we have a poll live at the moment. We'll be doing 3 polls throughout this panel. I'll let you know when we change to the next one. Currently, the question is, to what extent do you believe the payments industry is a competitive market that offers ample choice to its users, whether consumers or merchants? So you can let us know the extent to which you agree with that, and we will reveal the results at the end. As I say, we have a couple more polls to come. Sorry, excuse me. Abdulaziz, can we come back to you, and can we talk a little bit about your rationale for setting up a national payment system in Saudi? What were the benefits? Was it important for Saudi Arabia to operate your payments in-house, not relying on third parties? Was that part of the rationale?
I think for any country to implement a national payment system, there are set of reasons. We have certain KPIs and numbers that we want to achieve for the country as part of Vision 2030. We have certain KPIs as part of the central bank strategy. We look at financial inclusion, we look at digitalization of cash payments, We have reached certain numbers that I'm going to share with you. But before that, I believe maybe the first thought that will come to anyone's mind when talking about national payment systems is maybe the implementation of them is because of independence. But as I said, the whole journey started a very long time ago, and we had and the people who worked on those systems since the beginning, they had a very clear strategy from the beginning. And maybe I can put them in points just to summarize as much as I can. And I believe I can start with number one is to simplify and increase efficiency. And by that, we can reduce the cost of payments overall. Also, that will result into the contribution to the economy through our own payment systems. Also the contribution to the economy through the payments growth. We want to build national payment systems to enable fintechs, enable also fintech investments and overall payment digitization, accelerating e-commerce and accelerating SME growth. So we need to use our national payment systems to utilize our payment systems to do that. One very important also aspect is maintaining stable operation and infrastructure growth, because the numbers are the year-to-year growth when it comes to the number of transactions is very, very big. When it comes to the dependency on or the way that how we run our own operation, is it in-house or depending on third parties? The Saudi Payments as an organization is unique by itself because we run and operate for the central bank. We run and operate several payment systems, and each and every system by itself has its own unique setup that requires either certain technology to be operated for that system, or certain policies and procedures. What we do usually is we depend in our sourcing strategy, when it comes to our sourcing strategy, on running everything in-house, unless we require support from vendors and our own technology partners, and certain systems that are new technologies that are introduced in the market, where we build, operate, transfer to be run under payments, under Saudi Payments.
Thank you, Abdulaziz. You mentioned growth, year-on-year growth in payments. Is that just because of economic growth in the country, or is that a growing reliance on the digital payment solutions you're providing, or yeah, which is that?
So there is organic and non-organic growth. And non-organic growth, I would give you a very, very clear example, which is the pandemic. What happened there actually jumped with the numbers in a way that we didn't expect and we didn't put in our projections. But there is also some organic growth, technologies that we adopted that actually helped the society to adopt more way of digitalization of payments. Take, for example, mobile payments. That way or method of payments has actually accelerated the adoption of payments within the kingdom and numbers that we all didn't expect. 43% of our current transactions are done through mobile devices. And that is a very large number. NFC is very, very high. We do around 95% in NFC transactions. And all of that is driven by technologies that were not used before and now currently being utilized.
Makes sense. Thank you. Just to let the audience know, our second poll is now live. It is, which of the following 4 criteria for the assessment of payment systems would you deem the most important? Technical resilience, safety and security, domestic and cross-border interoperability, or user experience? Again, we'll be revealing the results of these polls at the end, and we've got one more poll that should be coming live in about 15 minutes. Thank you. Tim, can I come back to you at this point? Can you talk a little bit about the funding setup for the national payment system and how that works for you guys?
Okay, thanks, Lee. Yeah, in South Africa, as you'd be aware, the central bank runs the high-value RTGS, and it has chosen not to offer retail payment services. And retail payment services are offered by the market. We have a domestic ACH, and we have card schemes that are offering retail payments in South Africa. Now, in terms of the development, we have a vision for the system, which is the vision for the country, which is shared by the central bank as well as the private sector, including the ACH and the card schemes. And in terms of funding the infrastructure, we would like to work with the market to say, we do not wish to see competition on infrastructure, and the infrastructure is built in a collaborative arrangement by the market, but then they compete on services, on products that they offer on top of that infrastructure. Now, in establishing the retail payment infrastructure, it is established by the market participants and coordinated in the main by our main ACH for the credit transfers and direct debits. And this infrastructure also offers the switching and clearing of card transactions. Although the cards could have been issued by a Visa or MasterCard, the issuer decides whether to route that transaction internationally, and the majority are routed domestically. Now, that infrastructure is built by the market, and the participants on the system then compete on top of that. The RTGS infrastructure is built by the central bank, and in the main, we recover operational costs of offering settlement services. And in this regard, we ensure that we bring affordability based on our vision, where we need to ensure that payment services are effective. We ensure that we recover all the costs, but we spread it over time based on our recovery model. And the payment services provided by the private sector, as part of our oversight arrangement, we actually look at the fact that the efficiency of the system is maintained, although we don't have a direct pricing mandate, but we are comfortable about the pricing of these services. And we have a financial sector conduct authority that also looks at pricing for these services. But the retail payment infrastructure is deployed by the market, and they offer retail payment services on that. Of course, the card schemes also offer their own infrastructure for the issuance of cards. And as I say, the majority of our card transactions are acquired through the domestic infrastructure.
Thank you. Okay, I'd like to come to you, Dirk, at this point. We've got a couple of questions coming in, and we were going to be talking about this anyway. In terms of cross-border acceptance and interoperability, you've already mentioned that a lot of the domestic card schemes in operation are only acceptable domestically. Can you talk a little bit about FX costs, so the interoperability outside of the euro area? We've got a question here. FX costs are high, and often it's difficult to link with domestic solutions.
Yeah.
What do you see those ways of improving?
But perhaps allow me two additional remarks. First, I think we speak of 3 different, I would say, cross borders here in Europe. The first one is the cross border within the euro area, And perhaps a lot of people might say, what is the problem? Because you have one currency, and indeed, there you do not have a currency problem. So that is fairly harmonized up to now. Although one must say, and I said this before, that even for card payments in the euro area, you need the international card schemes when you go cross-border, even within the euro area. So if I would like to pay with my card in Lisbon, for example, I would have to use the international card scheme. And that is something where we also question whether we need additional alternatives for that in order to improve the situation, because that is also an aspect of competition. The second one is there are some countries in the European Union which do not have the euro. So they are part, and here it's perhaps also important to say that a lot of regulation in the European Union is also for all the European countries, whether they have implemented the euro or not. For example, the PSD2, so the Payment Services Directive, that applied to all the countries. So there is also a certain harmonization, and they are also part of, I would say, the SEPA area for euro payments, although they do not have the euro. But indeed, when we go then beyond the euro area, I think there is a need that the current situation is not sufficient. When you compare it, for example, how easy it is to send, I would say, an email or something like that, and you would compare it with payments, it's much more complicated. So it is indeed significantly more expensive. It is slower. It's intransparent. And that, by the way, is the reason that the G20 have set up the work stream to improve the overall situation. Yes, for sure, we are already, or consumers are able to use card payments, whether they go to the US or not. Then we have the correspondent banking. Then you have specific providers like Wise or Revolut trying to make it more efficient. But I think that what we see is SWIFT is also trying to do with SWIFT Go and SWIFT GPI to do it, but we are not yet there. And I think it is quite clear the G20 have said by 2027 we want to see a clear reduction in fees in running times. And I think in order to do that, we have really to put a lot of effort in that. Well, I personally believe we will not find one-size-fits-all solutions. That is quite clear. But I believe one of the most promising avenues could be really to interlink instant payment systems for several reasons. I think a lot of countries today, they have implemented or are being in the process of implementing instant payment solutions. They might already be on international standards so that it is easier to interlink. And I believe it is much easier if you really base those improvements on already existing infrastructure. But that being said, I think also here you must make sure that there is a competitive, very efficient market for currency exchange, because that remains. And I think there are some promising avenues. For sure, everybody has heard that there is a lot of innovative activity to see could market-making facilities or wholesale digital currency improve, I would say, also the cross-currency avenue. And I think we will see some progress in that. And I also think that all the discussions on retail CBDC, they are also motivated inter alia by the fact that this could also improve the cross-currency and the cross-border dimension if those ideas are factored in at a very early stage when designing CBDC.
Fantastic, thank you. Tim, Abdulaziz, anything you wanted to add on the cross-border interoperability question, how you guys address it personally?
Oh, thank you. I think Derek covered it.
Sure. Tim, were you? Yeah.
Yes, I thought I would take the floor. In our own region, we have implemented several solutions. We have an RTGS that is running for a 15-member block. Indeed, we faced with the challenges that we don't have a single currency, and thus the system is leveraging the dominant currencies, of which the South African rand is one of those that are used prominently across borders here. And we are implementing a retail instant payment solution or in the multi-currency environment as well. And in this instance, we're looking at ensuring that the operator who is the ACH in the region connects to the domestic RTGSs in order to ensure the instant payment to flow from one currency to another. Of course, the currency conversion remains a challenge in terms of competitiveness, in terms of the exchange rate margins that are used in these transactions. And this is an area that we are navigating. And we hope, as Dirk indicated, with an MCBDC type solution, we could gain efficiencies in terms of currency conversion. And in this regard, you may be aware that we joined the project DANBA that was facilitated by the BIS Innovation Hub to try and contribute to that knowledge that we could deploy in a live environment in the future.
Yeah. May I also intervene? Sorry, just because also coming back to that, I think also here in the Euro area, there will be two countries from the EU, Sweden and Denmark, which will also use the target platform of the Euro system. So I think also using a common platform for instant payments or large value payments also in different currencies, that could be an, I think, also good way. But again, as Tim said, you might also have to manage then the cross-currency dimension, because that is not there. But I believe that are elements and approaches which are perfectly geared for those areas where you also have a tight economic cooperation. I have some doubts that we will end up with one single platform for all the cross-border payments in the world. That is not what I personally believe will be the most realistic solution. And therefore, we also have to see how to create interoperability between infrastructure, be it conventional or be it in future CBDC. Sorry for my intervention.
Just to intervene also, there are two promising initiatives here in the region called AFAQ and Buna. Both initiatives are for regional RTGS between the Arab countries and GCC countries, but they are not yet completely implemented. So just this is for public knowledge.
Fantastic. Yeah, thank you, guys. Yeah, it's a really interesting area, and you know, with the BIS, the CPMI roadmap, a lot of really interesting work going on to improve things there. Just a note for the audience, poll 3 is now live. To what extent do you believe that the physical location of a payment system's infrastructure correlates with its resilience? Which allows me to segue onto my next point about technical resilience and outages. I think what this question is really getting at is about vulnerability to various causes of disruption. You know, extreme weather events or natural disasters is a common topic here. Does anyone want to weigh in on your approach? Perhaps one for you, Tim, on how do you minimize outages? And you know, and what's your approach to ensuring technical resilience?
Yes, thanks. I think this is quite key when we would like to ensure the availability of the service and contemplate whatever disturbances that may emerge and how to mitigate them. And in this regard, we engage with the market, and specifically we take responsibility ourselves for operational resilience and ensuring that we set standards so that we can ensure that our offerings, both by the private sector as well as the central bank, would actually achieve the desired availability. And in this regard, we have the out-of-region requirements that the primary infrastructure and the alternate infrastructures should have a merit of diverse feeds in terms of telco and power supply, and indeed taking into account, as you say, the possible weather impacts that could actually emerge. And in this regard, we set standards as to how far these infrastructures could be located with the fees, including the operational capability of the parties monitoring and operating the systems. We do this ourselves for the RTGS, and the debate at the moment is whether it's sufficient to have the primary and alternate, or we need to also consider a third side, even if it could end up being warm and not hot, so that we can cater for this. And indeed, in this respect, we also factor the possibility of attacks that could have been intentional on these infrastructures and how those are mitigated. And of course, in this area, we also leverage the international standards coming from the BIS CPMI, and we ensure that they are embedded in the configuration of our infrastructure so that we retain this operational resilience.
Thank you, Tim. Yeah, I mean, the physical attacks on infrastructure is a very real possibility. There is also the possibility of digital attacks and cyber attacks, and the impression that we get is that as the technology underpinning these grows more complicated, the surface area for attack by cyber criminals is also growing, and the vulnerabilities are growing there as well. Dirk, possibly you might weigh in on the cybersecurity question.
Yeah, I'm not quite sure whether this is so different when we speak of fraud, cyber, operational resilience. I think it's all quite I think tied together. And for me, perhaps allow me 3 or 4 general remarks to that problem, because you mentioned technical issues, but that what we have seen also with regard to cybersecurity, that this you can have a very good protection, but it is the human factor, yeah. So that also staff, for example, is not well aware, and they are prone to scam attacks. So that is also an important point. The second point is, I think it's not only the protection. I think now we focus very much on protection, but I think we must also be aware that it can happen, and then we must cater for the detection and the reaction. That's, I think, also now aspects which we need to have. And the third point, I think in general also to that, is that those issues are very often ecosystem issues. So it does not make sense if only one specific block is protected. You must ensure that there is an overall protection in the ecosystem. And with regard to cybersecurity, because that was what you mentioned, I think the approach is, I think in the Euro area here is, well, in the payments sector, we have a lot of still banks dominating. So it is an issue also for the banking supervisor, really to set very high standards. With regard to market infrastructures, we as a Eurosystem, we as overseers, we have defined cyber resilient oversight expectations, where we said that is what we expect this is what you should do, and we also check it, and that are very high standards. That being said, I think with regard to cyber, we must be aware that will never be an objective which you reach. It will be a moving target because you have new attacks, new technologies. So it is, I would say, a permanent process, and that is, I think, also a little bit different compared to other risks. In Europe, we will also have a new legislation, the Digital Operational Resilience Act, for payment service providers, setting really high standards so that there is awareness that they do their best to protect themselves. And we as central banks we have also set up a framework for so-called threat-led penetration tests, so that banks can say, look, we will now have we will undergo a very intensive test months where ethical hackers try to attack the infrastructure or the bank, and that provides really a good insight. So it should not be seen as something which you pass or not pass. It's not an exam, it's a learning experience. And I think that is really important. So we also need these new tools that really help to improve the cyber resilience. And for sure that what we also have in any case, whether it is a cyber incident or an operational outage, we now have strict reporting requirements for any provider. Within 2 hours, they have to report to central banks or to the supervisor that there is a problem. And that also, I think, puts pressure also to the banks, to the actors, to do really their best to seek operational resilience.
Yeah, that process of the continuous investment and research on new threats is very important. It does seem that these threats are constantly evolving. We've got some questions to address now. I'm going to introduce Saskia de Volder, Strategic Program Director for Cross-Border Payments at SWIFT. I believe Saskia has a question for the panel. Hi.
Hi, Louis. First of all, thank you. Very interesting panel. The question I have was related to, so we've been talking a lot about domestic payment systems to go cross-border. I think there are two main differences, which is the currency conversion, but then also the compliance and the regulatory requirements. And I think Dirk already talked a little bit about the currency conversion, but I would like to know from the panel, you know, what to do with compliance and regulatory requirements. They seem to be still the biggest hurdle to get actually to fast cross-border payments. So I would be interested in getting their view.
Yeah, very interesting question. Anyone want to weigh in particular?
I could perhaps briefly start. So the good thing is that I'm not a supervisor, so I'm not responsible for that. But I fully share the view that that is also what we get when we discuss with market participants, that this is, I would say, their most critical point. I think we need more harmonization with regard to the requirements, and we also need better technical tools to fulfill those requirements, also allowing perhaps data exchange between the different countries in order to facilitate the know your customer principles. But I fully agree that this is an urgent matter which needs to be addressed, because you can really set up wonderful new pipes. If the regulation is not aligned, then the water will not flow. That's for sure.
Yeah, clearly some development needed there. Sorry, Tim, please.
Yeah, thanks, Dirk. Let me just add and say, indeed, this question resonates with us. When we implemented solutions in our region, we found that our desire was for efficiency and the efficient flow of payments, but we found that the other regulators were about the compliance requirements where payments were supposed to be stopped for other regulatory checks to be effected. Indeed, the work of the CPMI cross-border is actually aligned to what we're trying to do for us to align our objectives and ensure that the objectives can be achieved, and we implement solutions that can ensure that compliance is actually adhered to while efficiency is also achieved. These were in the two areas where it was AML requirements, as well as balance of payment reporting, where verification for reporting had to be undertaken before the payment would be allowed to flow. So indeed, to the question, we call for collaboration by the various regulatory authorities so that we align our objectives and we find solutions to ensure that both are met. But it's a tension that we have to manage quite carefully.
Yeah, absolutely.
And if you allow, perhaps I also personally hope that by implementing perhaps ISO 20022 at a global scale, and at the same time also trying to harmonize the requirements, sometimes with regard to the addresses, sometimes you need the family name only, sometimes you need the full name. So that are those things where I hope that we could easily progress, at least to try to make the process smoother compared to that what we have today. But let's see whether it will work or not.
Yeah, the ISO 20022 format does seem like it's going to be a very important part of this story. Can I bring in Gabriela Savastano, partner and head of services for the UAE CMS? Hi.
Hi. Yeah. Thank you for the interesting discussion. My question is actually centered around digital currencies, because we've spoken a little bit about reduction in costs and increased security. So my question is, what impact do you think that central bank issued digital currencies could play to improve the international payment landscape?
Yeah, very exciting possibilities there. Tim, do you want to jump in on that?
Yes, when we look at CBDC, I mean, from our side, we look at it at angles of what it can offer that current conventional solutions seemingly would struggle to offer. And let's say, for instance, when we discussed possible benefits to the payment system of us issuing a CBDC, one of the key factors that is still unknown, but we said, perhaps if we talk about this issue of the programmability of money, the current systems cannot offer that, but perhaps a CBDC could unlock a window for us to actually achieve that. Things relating to smart contracts where the execution would be advanced, where conventional systems cannot actually address that. But when we come to cross-border, if the CBDCs, and when we talk about this term MCBDC, could offer platforms where the conversion could be made more effectively, it could then address some of the frictions that we're talking about, currency conversion and all that, and that perhaps could be something that could turn out to be a benefit that the current conventional systems were struggling to solve for. But when we transition to CBDC, if we do, would actually make us realize that benefit. So, but we interrogating it in terms of what current systems can offer that we feel the CBDC can offer. And it's interesting that there could be aspects that it could deal with much more effectively than current conventional systems.
Yeah, it does seem very promising, but a long way to go there. Anyone else on the panel want to address that one? Then
perhaps
sure.
Very shortly. First, I believe, and as said before, I believe for the G20 targets 2027, I would not have so much hope that CBDC will really play a big role, because I think we should be realistic. And there I doubt a little bit. I also believe that CBDC will not solve the problem of currency conversion. We already had it. And also the regulatory compliance that I think should also be taken into consideration. But on the other hand, I think there are two issues which might help. The first one is I would expect that CBDC would be broadly available. So we will not have a problem, or I hope at least that I think the reachability issue is perhaps much more easier to handle with CBDC. Second, I believe that it will also make possible to have shorter process chains compared to that what we see today. And the third point, I know that a lot of people will not like it, but I have the feeling sometimes the problem in international payments is there is no business case, we have a strong problem in really having a coordinated effort among a multiple of players. That is, I think, what we don't see at the moment and what we have not seen in the past 25 years. And CBDC is something where the central banks will step in. And I believe those questions are questions which could more easily be solved by central banks perhaps than the market. But that's my private view.
Fantastic. All right. Thanks very much, Gabriela, for your question. I'd like to bring in Barbara Dreyer, is the Director of the National Payment System at the Bank of Namibia. Oh, yeah, there you go.
Sorry, I was just trying to find the buttons there.
Oh, no.
Yes. Thank you so much. And to the panel, also very interesting discussion indeed. My question relates to the fine balance between, I think one of the panel members talked about from a payments perspective, you're trying to work towards efficiencies. But then there are other regulatory requirements that speak to compliance. Now, oftentimes, the cost of compliance is usually, or in most instances, cited as part of the cost that gets transferred to customers. Now, I would like to understand from the panel, what is it that you are doing in your jurisdictions, particularly in instances where fees and charges to the end user are not relatively reasonable? Is there anything that you are doing to see how you can bring that down so that, you know, to make things easier for the customer then also as an end user? Thank you.
Thank you, Barbara. Abdulaziz, do you want to jump in there?
So basically, thank you very much for the question. It depends, as Barbara said, on the jurisdiction itself. Why and the goal of the national payment system implemented. So, for example, if we take Saudi payments and the national payment systems in the kingdom, Saudi payments is based on a non-profit maximization goal. This is based on the needs of the market itself, just to grow the market, to enable the market to have opportunities when it comes to digitalization of payments. And by doing that, we actually bear the costs whenever is required in order to support the market. That might not be the case for many other jurisdictions, but it depends on what exactly the central bank in each jurisdiction requires and needs from the national payments to provide. And I can speak on behalf of Saudi payments and the Central Bank of Saudi, SAMA. The goal of creating and implementing and running national payment systems is enablement. So by doing that, profit is not the main goal of the national payment systems.
Fantastic, thank you. Anything else?
Thanks.
Tim, sorry, yeah, please.
Yeah, I'll add, and Barbara indicating that you're asking what are we doing, but the best I can share is that we are in conversations on what can be done to ensure that we still achieve regulatory compliance while we bring efficiency that would hopefully, as you ask, impact positively on the cost of the transaction. And in this regard, we're looking at leveraging technology to change processes and in some respect have parts of the key of those processes automated. Derek indicated ISO 20022, which would enable us to carry quite rich information that could enable these compliance checks to be done without manual interventions and other forms of intervention. So unfortunately, these are just still conversations amongst regulators to review the processes and ensure that we can leverage the change in technologies and automate some of the processes, and hopefully those could translate in lowering of these cost burdens that are being passed due to compliance requirements.
Thanks very much.
Perhaps if I
Please
add 3 points. First, I still believe it's the competition which help normally to keep the price at a fair level. But I think it should also be acknowledged that is not always possible. And there are, I would say, 1.5 examples in the EU. First is the interchange fee regulation, which have been applied for quite some years. So putting limits on the interchange, I think it has helped to stimulate the card payment market. And the second one, we still have now the problem that banks are not really offering instant payments at a fair level, at least not all ones. They think instant payments are a premium service, and that leads to the fact that instant payments are not developing as we hope. And that is the half example. I think there will be presumably a legal action by the European Commission, possibly also requesting that instant payments, for example, might have to be offered at the same price like normal credit transfers. But let's wait. But that are just 2 examples, I think, from a regulatory intervention perspective.
Yeah, thank you. And finally, if I can bring in Adam Tukmanski, the director of the National Bank of Poland's Payment Systems Department. Adam.
Thank you very much. I have a question related to problem of safety of payments. One of the measures of safety of payments is level of frauds, and according to 7th or even 6th and 5th report on card frauds published by European Central Bank, Poland, with the dominance of Visa and MasterCard, has one of the lowest level of frauds or ratio of frauds in the whole of volume and value of card transactions. So one could say that level of frauds or efficiency of anti-fraud solutions could also differentiate different schemes or systems. So my question is whether this factor, having domestic schemes or not, is crucial, is important for explaining these differences, or not. There are more crucial other factors or circumstances, and we could skip this factor from the analysis. Thank you.
It's a very interesting question. Abdulaziz, anything you wanted to add on that one?
Let me give it a first bite based on what we had in our market when we find that some of the domestic transactions are routed internationally through the schemes. One of the reasons when we were trying to interrogate that was that the international schemes offer better fraud services because they have huge databases against which they check these transactions. And it was said to us that that prompts some of the issuers to want to route these transactions internationally so that they benefit from these fraud databases. This is because we have made a rule in our country to say the issuer decides whether the transaction is routed through the domestic infrastructure or offshore. And they were saying that the domestic infrastructure is not rich in terms of fraud data, but the international one has that. And indeed, it could be true that the decision to route depends on fraud detection that you are able to leverage. I just thought that as a comment.
Yeah, it's a very interesting point to add. Anything from the other panelists?
I missed part of the question due to the connection, but from Tim's answer, I'll try to deduct the question.
I can just summarize briefly. It was about the relatively low instance of fraud in Poland, where Visa and MasterCard are the dominant providers of payment services, and he was positing that as an explanatory factor.
International schemes provide national fraud monitoring systems, as Tim said. They provide chargebacks and incentives, and all of that is considered for the users of those schemes. But at the same time, I believe.
I think we've lost Abdulaziz there.
Yeah, perhaps very short remark from my side. I do not believe that this will be the distinguishing factor. I think when we look at fraud in payments, we also need to look at what is the use mix, because if it's only for example, the e-commerce, or do we speak of POI, physical POI? I think that is a very difficult question, which really requires also, I think, a more careful analysis of the different root causes and influence factors. But I don't think that whether it is an international or domestic scheme, that this is per se, I would say, the determinant of this question. That's my view.
Abdulaziz, I'm sorry, we lost you during your answer there. Do you want to go again?
I think I have some instability in the connection.
Yeah,
I'm sorry about that, but as I said, just the current setup of the international schemes allow for certain rules to be applied on that, either from a monitoring or a reimbursement perspective. For national payments systems, there are also regulations that can be put on banks and on payment.
We seem to have lost Abdulaziz again there. I would just like to weigh in on this question. I want to give a quick summary of the findings of the report. I think that we've gone into a lot of the topics that we've discussed today, and there's been some really interesting outcomes. And this question of fraud prevention. Oh, sorry, Abdulaziz, you're back.
I'm okay. So
Okay,
just
sorry.
because of let's just skip this one, because it's
Sure.
remaining unstable.
Sure, not to worry. So we're running over slightly, and Tim has to drop off, but thanks very much for your participation today, Tim. Been very, very insightful and very helpful, so thanks very much. I'll just continue with a quick summary of our findings in the report. I think Tim made the point regarding the international payment systems database. You know, they have this huge exposure to the different types of fraud, and when they encounter it in one jurisdiction, can implement protections against it in others, and that is pretty clear advantage that they can have against fraud. And it's interesting to hear from Tim that some issuers are preferentially routing payments through them to benefit from that kind of protection. Similarly, Abdulaziz mentioned chargebacks. That's another service that is provided at the international payment system level frequently. That over the course of our research for this paper was expressed to us that was a factor for customers in particular to select international payment systems rather than national equivalents. I want to go back to the topic of technical resilience to outages. That I think is a very important topic. As we've established on the panel today, the digital payments are growing in their importance economically around the world, and it is therefore ever more important that these systems don't go out frequently, and if they do, it's for only brief times. One of the key aspects of technical resilience is building redundant capacity, having a backup system in place. It's obviously very expensive to build duplicate data centers, but that is something that is basically becoming a must for payment systems to reduce the likelihood of the systems going down entirely. It's also worth pointing out that the competition here is very important. Having multiple interoperable payment systems simultaneously in operation in a jurisdiction provides a degree of that redundant capacity that I've been talking about. If one goes down, another can take up the strain, and so it's very important to allow a situation where there are multiple systems simultaneously in operation. That's something that has come through very strongly over the course of the research for the report. I'd like to also talk about interoperability, particularly for the cross-border market. We've talked about that in some detail today, but yeah, I just wanted to highlight that it really has been there are some cases where national schemes are able to negotiate acceptance in other countries, but it is quite a slow process. I think it's possible to do it bilaterally, but the more connections you make like that, the greater the complexity of the system, and where it can be difficult to get the international multilateral schemes off the ground, but where those are in existence, it's over the course of the research of the report, we've encountered a very strong preference from central banks to adopt those and benefit from those scenarios. Finally, I mean, we haven't talked much today about inclusion, but the reliance on cash is frequently something that central banks are attempting to reduce in their economies, broadening financial access. This is something that international payment systems are not uniquely able to address, but we have in the report, I think it's interesting to examine some of the national payment systems in Mexico, in Nigeria, that have been started up recently and failed to be broadly adopted. It's very difficult to promote usage of a system without a very clear understanding of the way people use payments. I know, as Dirk was saying at the start, it really payment behavior can vary quite substantially over Europe and from country to country, and excuse me, and without a clear understanding of that, it can be very difficult to build up broad adoption. So in all, we mentioned at the start the topic of independence and strategic resilience, particularly from sanctions in the case of Russia. This is an important consideration, but I think over the course of the panel today and over the course of the report, we have talked a lot about some extremely difficult challenges that exist in developing national payment systems. The requirements for large investment upfront and continuously to meet the changing requirements of the user base and the changing threats, cyber, physical, etc., that these systems are required to address. For some countries that is possible, particularly those who have a long history of building up capacity and infrastructure, but for many, what our report concludes is that the technical expertise required, the investment required to keep it maintaining the appropriate standard is a very difficult bar to reach if you're starting from scratch. So do go onto the website. The link should be below your video just now to download the report. Should be very interesting. I think we have the results from the polls. Are those available, Maya? Hopefully we can just go through the results of the polls quickly, but I think we might be having technical issue there, so possibly we'll have to leave those for another time. Thank you for watching today. Thank you to my panelists, to Abdelaziz Al-Afleg and Dirk Schrader. It's been a pleasure. You've both been very insightful, as was Tim, who's already dropped off. But yeah, thanks very much, and thank you to the audience for listening today.
Thank you very much.
Thank you very much. Bye.